Good morning and welcome to the ADS Securities Markets Update. Finally, and after 17 hours of talks, the Greeks and the EU also reached a deal. However, there are many questions and question marks considering or to be considered in the next few days. First of all, is Greece really fixed on the short term? The answer is yes, but on the longer term, the answer is no. How? The first impression of the deal does not grant Greece a notable and enough growth in order to repay its debt, and even after the promised reforms. However, avoiding an exit from the EU is considered as a massive success for Greece and also for the EU or for the Euro Union, even with the Greek Prime Minister also Tsipras, who lost the battle. Also, the German Chancellor Angela Merkel also got what she wants in full. The good news, basically, or the first piece of the good news, comes from the fact that Greece will remain in the EU, which again is considered as a success for the EU as a whole, including also Greece. Moreover, the bond market reacted very well to the deal. Greece's 10-year yields also declined back sharply by 140 or more than 150 basis points yesterday, reaching even trading below the 10% after reaching at 12.5% in the past few weeks. Greece's 5-year CDS also fell by more than 1,000 basis points, declining toward almost 2,630 basis points so far, while it was above 11,000 last week, and this is also the lowest level since June 29th. The European equities also stopped bleeding since yesterday, and most of European equities are higher by more than 1%, including the DAX index, which also recovered well above its 11,000 resistance area, and right now is only far away by 7% away from its record high. And moreover, and from the technical side of view, the DAX index also showed a clear breakout on the daily chart, rising above its short-term downtrend line, and which basically clears the way for further gains ahead toward its 100-day moving average, which stands above or around 11,546 in the coming days. The euro remains also under pressure today, or yesterday, reaching as low as 109, almost 109.50 so far, as the inverse correlation between equities and the euro is almost at the highest level since 2009. And as long as the European equities keeps on rising, the euro is likely to remain under pressure, but the key support remains for the time being is at 1.0950. The bad news also that the ECB will maintain the ELA program for the Greek banks. However, the Ministry of Finance announced yesterday that the Greek banks will remain closed until further notice, and while the capital control also will continue throughout the day with no further details, and the deal has also to be approved right now by the Greek and the EU Parliament. Tsipras lost the battle already with the EU, which shows that the referendum outcome is basically useless. Therefore, a snap election could be seen in the coming months, but more importantly, the Greek Parliament might not approve the deal as it is against the referendum outcomes. Just as our markets see a resolution for the Greek crisis, eyes now turns to the nuclear deal with Iran. The news that Iran and the six powers have reached already an accord immediately, and this is basically what led to a sharp decline in oil prices, including a decline of 1.5% in Brent crude and 2% in West Texas so far, as the US dollar also continued to rise across the board. While this could be again an overreaction, as there is no guarantee right now that once the sanctions are lifted, Iran will be able to export more than 1 million barrels to the global markets. So given this, it is also most likely that oil prices will stabilize in the coming days. But again, the main thing, or the major view, will be very soon once we see the deal details. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic releases, reports, and analysis. This is just a short overview about those two important subjects in Greece and Iran. I'll see you once again next week on Monday with our new theme, with our new research content. Thank you for watching. I'll see you again next week.